financial statements, but it does not apply on IFC reporting. Means this standard do not apply when auditor has to report on internal financial control, operating effectiveness. That point exclusion was there. Now it is removed. That's the only amendment. And format of audit report has been amended. Few more clarifications they gave. You can apply 701 here, you can apply 710 here, you can apply 720 also here. They just added certain clarifications like that. Technically, it is not an amendment of a standard altogether. They just gave a revised 800, revised 805, revised 810. All the three standards they revised and gave with a new format of audit report. You can download the audit report formats in our website. We have our website. You can go to the website and select CA final. Then here you see 800, 805, 810 original. Okay, so they're revised one. They're revised standards. You will find the word revised within bracket. You see even in 700, 705 you will find the word revised in bracket. So revised means what? Earlier there is a original standard, now it is revised. Tomorrow when they revise, what they will do? They will remove the revise. Yes, we will discuss directly. First we'll look at this audit report formats in 800. At the end of 800, this is 800, 805, 810. Two illustrative audit reports were there. Okay, one illustration is here, an audit report on complete set of the financial statements. This is also one small clarification which they gave. Earlier, no, they simply refer it as special purpose financial statements. Now they are referring it as complete set of financial statements prepared under special purpose framework. Even when complete set word is not used, generally by default financial statements means what? Complete set. Unless they specifically mention it is a single financial statement. Simple. Earlier, some 5 to 10% vagueness is there in the standard. Now that is removed. Okay, now they made it much more clear compared to the previous version of 800, 805, 810. Now they made it much more clear. Even though it is clear, little vagueness is there still. But compared to the previous original standard, it is better. Now look at the audit report, how it looks like. So illustration 1, audit report. An audit report on complete set of financial statements of the entity other than listed entity, prepared in accordance with financial reporting provisions of a contract. We are preparing it as per the requirement of a contract. We have seen in our very first class, fundamental session, when financial statements are prepared in accordance with the provisions of a contract or in accordance with the requirement of a specific user, that framework is called as special purpose framework. And if the financials are prepared in accordance with that framework, we call it as special purpose financial statements. Now here what are they saying? An auditor's report on complete set of general purpose financials was not yet issued. Means on general purpose financials, audit report is not issued. And the applicable financial reporting framework is a compliance. Why it is a compliance framework? Because the company has to prepare financial statements as per the contract terms and conditions exactly, without a deviation. They don't have flexibility. They have to prepare financial statements as per the contract. Whether they are true and fair or not doesn't bother. So it's a compliance framework. The characteristic is a compliance framework. Next, and auditor concluded an unmodified opinion is appropriate. And based on the audit evidence, the auditor concluded that a material uncertainty does not exist. Distribution and use of audit report are restricted. Remember, financial statements distribution is restricted. Why? It's a special purpose financial statements. Others may not understand. A third party who is privy to the contract, okay, who is a third party to the contract, who do not know about this contract, if at all he read these financial statements, he may misunderstand. So this is only for the contract purpose. Contractor, contractee. For us, for these three parties people only, auditor. Only we three, if at all we understand that, that's enough. So it is restricted for distribution and usage. The auditor has determined that no other information, there is no other information also. Those responsible for oversight of financials do not differ from those responsible for preparation of the financials. Those responsible for oversight of financials are not different. Management and top management both are one and same. The auditor has no other reporting responsibilities under local law. Generally, CARO, other reporting responsibilities we discussed, report on legal and regulatory, they are all applicable where? General purpose financial statements. They are generally applicable for general purpose. 143 section of Companies Act is applicable for general purpose financials. Is it dealing with special purpose? So here there is no other reporting responsibility. And now draft the audit report. You see the heading, independent audit report, addressee, not to the members, as per the contract, as per the framework. First section, opinion. Earlier old format, if you see, the first section is not opinion. The old material, if you see in our book also, contents of audit report is given in 800 also. The first part is not opinion. First part is introduction, then management responsibility, then auditor responsibility, then basis for opinion, and then opinion. That's how the format of original SA 800 audit report. Now the format is revised. And you see, no much similar to 700 only. We have audited financial statements of ABC Company Limited, yes or no? Comprising cash flow, all that, correct? In our opinion, to the best of our information, according to the explanation given to us, the accompanying financial statements of the company are prepared in all material respects in accordance with the financial reporting provisions of the contract. And they give true and fair word is not there, you see. And they give true and fair when we can use. If it is a fair presentation framework, here you are preparing financial statements absolutely as per the contract, which do not allow deviation. Since there is no deviation permitted, you absolutely have to comply with the contract. It's a compliance framework. Have we discussed it earlier also? Next, basis. We conducted our audit as per standards on auditing. Our responsibilities under those standards are further described in auditor responsibility section of our report. We are independent of the company in accordance with code of ethics. We complied with code of ethics. We believe that the evidence obtained by us is sufficient and appropriate. Correct? Same like general audit report. There is another one, emphasis of matter. This is compulsory. If financial statements are prepared using a special purpose framework, you should clearly highlight that it is prepared in accordance with special purpose framework. First of all, in the financial statements itself, in the basis for accounting, management will explain on what basis the financials are prepared. They will explain the notes to accounts first page itself. Balance sheet, P&L, cash flow notes is there. In the notes, in the very first page itself, what is the basis for preparation? Reliance also. See, even this is a common requirement in general purpose framework and special purpose framework. You see, Reliance notes to accounts, I will show you. First, they will talk about what? Basis for preparation. What is the basis for preparing these financial statements? Ind AS they followed. Yes or no? Ind AS they followed. Schedule 2. Schedule 3, Division 2 they followed. On what basis you prepared? They mentioned it. But do we need to highlight this in our audit report generally in emphasis of matter paragraph, basis for preparation? No. It's a general purpose financials. Fundamental assumption. General purpose framework. Everybody knows it. But in case if the financial statements are prepared in accordance with a special purpose framework, for sure company has mentioned that in basis for opinion. Sorry. For sure the company has mentioned about basis for preparation in financial statements. They mentioned it. You should highlight it compulsorily under emphasis of matter paragraph. You should compulsorily highlight. Here it is not your judgment. In auditor's judgment, relevant for the user's understanding. Users know it is a special purpose. What if the audit report goes to somebody else? What if audit report goes to somebody else? If they do not know that the financial statements are prepared for special purpose framework and they do not observe that notes to accounts, because 50-70 pages is the notes. If they do not pay attention to the first point, they will misinterpret the financial information presented in that and they take a wrong decision. So in the audit report, compulsorily highlight under emphasis of matter paragraph, what is the basis for accounting this special purpose financial statements. Compulsorily auditor has to highlight. This is one change they brought. Able to understand? Now, now look at. So what auditor is saying, we draw attention to note number so and so, which describes basis of accounting. Like what is there? The financial statements are prepared to assess the company in complying with financial reporting provisions of a contract. In the notes, it is mentioned in accordance with what contract the financials are prepared, what are the contractual accounting policies, contractual accounting principles. It is there. They asked us to prepare balance sheet, P&L on cash basis of accounting. Something is there. As a result, the financial statements may not be suitable for another purpose. Our report is purely intended for so and so companies, should not be distributed to, should not be used by parties other than these companies. Our opinion is not modified, by the way, in respect of this matter. I'm just giving you an alert. So in emphasis of matter paragraph, you should talk about basis for accounting, restrictions on distribution and usage. Many times this was asked as a question in exam. Whenever special purpose related question comes, no, there are 3-4 selective topics are there, which is where highly examiner will be tempted to ask. Don't worry, in our book I will show you all the conceptual part of this. I'll show you. Then obviously tell me who is responsible. Management is responsible for preparation of financial statements in accordance with the contract, and they need to make sure that they are free from material misstatement. They are responsible for assessing going concern of the entity. Yes or no? Auditor responsibilities. Our objective is to obtain reasonable assurance. Reasonable assurance is a high level of assurance. Entire, auditor responsibility section you see as it is. Further, there is no other matter. Other reporting responsibilities, nothing will apply. Straight away, auditor, Udin. Correct? Huh? Easy or not? The audit report. So what are the contents of the audit report in a special purpose framework related audit report? Opinion, basis for opinion, emphasis of matter paragraph, management responsibility, auditor responsibility. First title will be there, addressee will be there, and at the end signature of the auditor, membership number, FRN number. That's it. And date of the audit report, place of the signature. These are the contents of the audit report. One major concept over in 800. Understood? One major concept is over in 800. Now illustration 2 will see. Here in the illustration 1, we prepared financial statements in accordance with provisions of a contract. Here we are preparing financial statements in accordance with provisions established by a regulator. For the purpose of this illustration, this is a fair presentation framework. Here you are preparing financial statements in accordance with actually there is a contract. Let us see the characteristics. Audit of complete set prepared by management of the entity in accordance with financial reporting provisions established by a regulator to meet requirements of that regulator. Management does not have a choice of financial reporting framework. No, there is no choice for them. Like they can't choose schedule 3, all that. Regulator has given what format to follow. Regulator has given what guidelines to follow. In those guidelines, fair presentation is permitted. Like you can deviate if at all. That regulation is little different. The applicable financial reporting framework is fair presentation. Now immediately you might get a doubt, sir. It is prepared as per regulator, and you are saying management does not have a choice of financial reporting framework. Then how come it is a fair presentation framework? If at all a company has to prepare special purpose financials as per third party requirement of somebody, by default, which format we follow? Schedule 3. Division 1, Division 2, whatever. By default we follow Schedule 3. Or maybe management will have another choice. Third party and management decided let us not follow Schedule 3, let us follow some other format. Here management has a choice of financial reporting framework. In this case, they do not have the choice. Regulator has given the framework. You should follow regulatory framework. Schedule 3 also, no. It's not Schedule 3, it's not that. Regulator gave a framework. We'll discuss about who is the regulator, all that example later. Regulator himself gave a framework. Which framework? Special purpose framework himself he gave. In that framework, its aim is to achieve fair representation. In that framework, the objective is to achieve fair presentation. Some other format of balance sheet P&L they gave, and they want true and fair. They want true and fairness. Automatically that framework is what framework? Fair presentation framework. Choice of framework means what? It is not fair presentation or compliance. It is about Schedule 3 some other format. Understood? The terms of audit engagement. The terms of audit engagement reflect the description of management responsibility. The auditor concluded a clean opinion based on evidence, no material uncertainty. Okay. Material uncertainty exists related to going concern. Okay, here no material uncertainty is also existing. Distribution of use is not restricted. You see, distribution of use is not restricted. So here you are preparing financial statements, complete set of the financials in accordance with financial reporting provisions established by regulator. Audit of complete set of financial statements that were prepared by management in accordance with financial reporting framework of a regulator, special purpose framework. If at all this word is not there, it might give a meaning that it is a general purpose. Or no? Special purpose. Why I went back and see here once again, you know, because they said it is not restricted. When the use and distribution is not restricted, which means the financial statements can be openly published. The audit report can be openly published. Anybody can read it. Since the financial statements are prepared in accordance with the regulator, in emphasis of matter paragraph, anyhow you talk about the basis for accounting, and you may specifically mention that it may not be relevant for others. It is not useful for others. It is only for the regulatory purpose. You will specifically mention. Maybe we may have to see what exactly the requirement we have to see. Now look at independent opinion, same, yes or no? Basis for opinion, emphasis of matter, basis for accounting only, but there is no heading here, restriction for distribution or use, yes or no? We draw attention which describes basis. The financials are prepared to meet regulatory requirement of DE of regulator. As a result, financial statements may not be suitable for others. So we are alerting people, others please stay away. It is not useful for you. Because it is openly available to you, but it is not useful to you. We are preparing for a regulatory requirement. Now regulator might want us to openly keep it. That's why we are openly keeping it. Regulatory might want us to openly keep it. Restated prospectus, for example, restated financial statements which are to be included in prospectus. How should we prepare a restated financial statements which are to be included in prospectus? Restatement of financial statements guidelines were issued by SEBI, for example. We have to prepare financial statements as per SEBI guidelines. Understood? And prospectus is an open document. And on that audit report is given. It's a special purpose framework. Financials are prepared as per special purpose framework, as per SEBI requirement, as per restated financial statements. Some provision is there. We are preparing as per special purpose. Auditor is also giving on that. And in the audit report on the emphasis of matter paragraph, he should clearly mention this is prepared based on SEBI requirement. This is not suitable for others. This is only suitable for those who are thinking to so and so invest in primary public offer, for example. Only for them it is relevant. Outsiders, no. Already company annual general purpose financial statements are available for your decision making. That you go and see. Understood or not? And material uncertainty, which means you see the order. First emphasis should come. Emphasis about basis for accounting. That should come first. Then material uncertainty has to come. What material uncertainty? We draw attention to note number that, you know, some material uncertainty exists. Our opinion is not modified in this matter. Other matter, the company has already prepared a separate set of financial statements for the year ended in accordance with accounting standard, and auditor already issued an audit report on the. In other matter paragraph, we are mentioning about audit report. What audit report? We or some other auditor, who knows? We or some other auditor, they have already audited separate set of the financial statements. Okay, on that audit report is given on so and so date. What are those separate set of the financials? They are general purpose finance. If at all, like from this report we can draw this conclusion. If at all the entity prepared special purpose financial statements in accordance with a regulatory requirement, and those financial statements are available in a public domain, the auditor shall, in the audit report, in the emphasis of matter paragraph, shall clearly mention that these financial statements are not suitable for others, and draw attention to the basis for accounting. Correct? Agreed? Also, in other matter paragraph, the auditor shall also mention about separate set of financial statements which are already audited either by him or by somebody else. or no, which is general purpose financial statements. So people who suddenly get this document, people on Google search, when they suddenly get this audit report, this financial statement set, and when they see this other matter paragraph, they understand that this is not suitable for them. They also understand that there is a separate set of financial statements, and in the same website they will see for separate set of financials which are actually general purpose financial statements. Clear? These are the disclosure requirements. One more major concept is over in SA 800. We'll go back and see. Now you will understand how easy that is. First you see the report and go and see the actual standard. Then you will feel dead easy. Finally, management responsibility, same, nothing different, yes or no? Auditor responsibility, same, yes or no? There is no. Finally, signing of the audit report. Over. SA 800 reporting discussion is over. Now what is this SA 800 is dealing with? Now, you see the standard heading, if you see, SA 800 heading, if you see, audit of financial statements prepared in accordance with special purpose framework. Audit of financial statements prepared in accordance with special purpose framework. What special considerations auditor has to keep in mind? So which means if you're doing audit of special purpose financial statements, there are some special aspects you should consider. Like in emphasis of matter paragraph, you should highlight about basis for accounting. You should talk about restriction for use and distribution. Generally, when do we restrict usage and distribution? If at all we are preparing financial statements as per contract, and contract specifically restricts distribution. Suppose if at all we are preparing financial statements as per regulatory requirement, and regulatory does not restrict us, we may keep it on a public domain. In that audit report, since it is available on a public domain, these financial statements, we should alert the users that they are not supposed to read this. They are supposed to read another set of financials which are general purpose financials. We should communicate these two incidents on emphasis and other matter paragraph. Agreed? Don't worry, we'll repeat enough number of times, it will come again. Until now, clear or not? Now, scope of 800. What the 800 is dealing with? Simple. By the way, again, the heading, there is little more to discuss. Heading, it uses the word starting special considerations, which means when you're doing audit of special purpose financial statements, what are general considerations? All standards on auditing, right from 200 to 700 series, even 700 series for that matter, I'm telling. They are all general considerations that auditor has to anyhow consider whenever you are doing an audit of financial statements. You see, that's why in entire 200 to 700 series, if you see, they never use the word, they never say whether financial statements are prepared in accordance with general purpose framework. They never use the word. They say whether financial statements are prepared in accordance with applicable financial reporting. What is applicable financial reporting framework? In view of nature of entity and objective of financials. Objective might be general purpose, or nature of entity might be bank, insurance, NBFC. What is an applicable financial reporting framework? The framework which is applicable is decided based on nature of entity, based on objective. So accordingly, applicable framework will be decided from entire SA 200 till SA 700 series. Everywhere we only talk about whether the financials are prepared in accordance with applicable framework. Indirectly, even if it is a special purpose framework, all auditing standards apply. Suppose when I'm doing special purpose framework audit, I need to obtain audit evidence right here also, because I need to give opinion, right? I should obtain I should give opinion. I should obtain evidence, right? How should I obtain evidence? 500 standard says. What level of assurance I should obtain in special purpose financial statements audit? 800 is not answering that. 200 already told you. On audit, you only obtain reasonable assurance. Whenever I am accepting an engagement to audit special purpose financial statements, I should give engagement letter. 210 standard is applicable. When I am auditing special purpose financials, I must also document 230 is applicable. I must be alert for the material misstatements due to fraud. 240 is applicable. Every standard is applicable. even when you're doing audit of special purpose financial statements, to the extent the standard not conflicting with 800. If at all there's a conflict between 800 and 200, 800 and before standards, 800 will prevail. Logical? Yes or no? So special considerations. So when you're doing audit of financial statements which are prepared in accordance with special purpose framework, what are the special points you should keep in mind? The first thing what the standard is addressing, can you accept such an audit? First of all, here a company called me. They prepared financial statements. I thought Schedule 3, general purpose, because fundamentally I assumed that. But they told me later, sir, this is not an ordinary balance sheet P&L which you see in your day-to-day life. We have a contract with some vendor, acquisition company is there. They are planning to acquire our company. So they asked us to prepare balance sheet P&L on a cash basis. You should have told me at the beginning. So, see, they were prepared financial statements on cash basis. Then auditor naturally gets it out. Can I do these kinds of audit? So SA 800 is addressing. Can you accept this or not? If at all you want to accept, what points you should check? And how to plan and perform this engagement? How to form an opinion on reporting on financials? The third part is what we completed just now. The third part is what we completed already by referring those illustrations. Reporting, forming and reporting. We'll once again get it. Now, meaning. What is a special purpose framework? Straight away they may ask you 4 marks question. Scope of SA 800, 3 marks question. Scope of SA 800, 3 marks question. Meaning of special purpose framework. What is a special purpose framework? It is a financial reporting framework designed to meet needs of specific users, which can be a fair presentation framework, or it can also be, we have just now seen, the company is preparing financial statements as per provisions of a regulatory, which is actually allowing you to follow fair presentation. Also, a company has to prepare financial statements as per contract, which does not allow deviations at all. Where true and fair is not a prominent factor, then that is a compliance framework. Understood? Next, any topic when you're studying, always don't directly start it. First understand how to approach this topic. Accordingly, plan that. Tomorrow when you're reading some other subject, something else, you directly focus on information. No, focus on analysis. Remembrance is always a byproduct. Memory is always a byproduct of understanding. You understand better, you remember better. So special purpose framework. So now tell me, special purpose framework means what? It's a financial reporting framework to meet specific user needs. It can be fair presentation or compliance. This framework only decides form and content of financials. The framework only decides what constitutes complete set of the financial statements. Generally, when someone asks you, what do you mean by complete set of financials? You will talk about 5 elements: balance sheet, P&L, cash flow, notes, so statement of changes in equity. In a special purpose framework, what is complete set? Will it be same? The special purpose framework, he will decide, the user will decide. What constitutes complete set of the financial statements is decided by user. You and me cannot decide. The user will decide, because at whose instance we are preparing the financial statements, he will decide that. Agreed. So what constitutes a special purpose framework? What constitute a complete set of financial statements? The special purpose framework only decides. Agreed? Everybody? The form of the financial statements, the content of the financial statements, which format to follow? User might tell, no, I don't want vertical balance sheet, I want horizontal balance sheet, traditional model, left side assets, right side liabilities, left side, whatever that, whatever. Okay, left side liabilities, right side assets. Yes or no? Left all liabilities, right all assets. Correct? Yeah. So the user might tell the format. You may have to prepare that format only. Correct? Next, examples. What is the example of what is it? For example, preparing financial statements, cash basis of accounting for creditors purpose, regulatory reporting provisions, contractual provisions like loan agreements, project grants, bond indentures. What is the difference between special purpose and general purpose? Special purpose framework is for specific users. General purpose framework is for common financial information needs of wide range of users. Have you seen all this? Financial statements. What is financial statements? Generally in this standard, wherever the word financial statements comes, it means complete set of special purpose financial statements. Wherever in the standard the word financial statements comes, they are not talking about single financial statement, because single financial statement is exclusively dealt under 805. 800 is only talking about complete set of special purpose financial statements. Now, what do you mean by complete set? Framework will decide. Is it only balance sheet P&L and notes, or balance sheet P&L cash flow and notes, or balance sheet P&L cash flow notes statement of changes in equity? So complete set means only 3 elements, 4 elements, 5 elements. That framework will decide. Some creditor might say only balance sheet or P&L also not required. Maybe only balance sheet constitute complete set that time. Just because complete set consists of only one item, can you say it as a single financial statement? Can you say it as a single financial statement? No. Single financial statement is a legal term. Complete set of financial statements is a general term. Complete set is a general term. So, if at all a company is preparing balance sheet in accordance with the requirements of provisions of a contract, plus notes to accounts is there to that, can I call it as a single financial statement? No. It is still a special purpose complete set financial statements. 800 standard is only applicable. Understood or not? Until now. What else? Financial statements also includes by default. Financials includes notes. Your answer includes working notes by default. Yes or no? So it includes related notes such as summary of accounting policies, explanatory information, basis for accounting, which the company talks. Correct? Then, so look at what is a special purpose framework. This itself can be asked as a 4 marks question or 5 marks question. Very good actually. Special purpose framework is a framework, is a financial reporting framework. It is designed to meet requirement of a specific user. It can be either a fair presentation framework or compliance framework. What constitutes complete set of the financial statements? What should be the format and content is decided by special purpose framework. Examples: cash basis of accounting, regulatory reporting provisions, contractual provisions. Special purpose framework is specific users. General purpose framework is addressing common financial information. It's a wide range of users. The term financial statements in this standard refers to always complete set of special purpose financial statements and also includes notes. Now, when you're accepting such an engagement, you need to consider certain information. A company called you, a client has approached you that, sir, you need to audit special purpose financial statements that we prepared. In SA 210, you have, in CA Inter, you might have seen terms of engagement chapter, you might have seen acceptability of a financial reporting criteria. Before accepting an engagement, the auditor has to check acceptability of the financial reporting framework. Did the company, for example, normally ignore special purpose points, all that. A normal company approaches me and wanted me to appoint as their auditor for the next 5 years. General purpose auditor, general purpose financial statements auditor, they wanted to appoint me for the next 5 years. Should I accept this appointment or not is the question. 210 standard says first check what framework they are following. Is that framework acceptable or not? Check out. Acceptable means what? In light of law, in light of regulation, in light of applicable financial reporting framework. Is the framework adopted by the management? Is it right or wrong? Here also a company approaches me. They showed me balance sheet P&L. The moment I saw itself, I understand why you prepared on a vertical format. Why you prepared on a horizontal format? It's a vertical format. No, sir. This is a balance sheet prepared as per information, specific requirement of a specific user. I should not accept this audit without understanding the user requirement. Show me first what requirement user raised. Show me the user requirement. They showed me the contract. There's an agreement which the company has with the user. They showed me the agreement and I read the agreement and I understood that what exactly the user requires. Then I will see whether the company prepared financial statements as per this or not. Suppose if the financial statements are prepared using some other framework, but not as per the agreement, not as per the provisions of the contract. Is the financial statements prepared acceptable in the light of the circumstance? Is it acceptable? No. Why it is not acceptable? Sir, you only told it's a special purpose framework. And what is a special purpose framework? You need to prepare financial statements as per requirement of a user. And you are bringing the user requirement and then showing me what he is asking and what you did. Both are not matching. And both are not matching. When acceptability of the financial reporting framework is unacceptable, how will I do the audit? The beginning of the audit itself, I should check acceptability of the framework followed by the entity. This is a requirement there in 210 also. Suppose you are appointing me as an auditor for general purpose financials, then also I will see whether your financial reporting framework is acceptable or not. But immediately you might get this doubt. Sir, in a normal audit, by the time when we are appointing, financials are not ready, no? How do auditor will know acceptability of the framework? That's why we send an engagement letter. We mention this point that the management is responsible for preparation of financial statements in accordance with applicable framework, nothing but Schedule 3 Division 1, Schedule 3 Division 2, accounting standards Ind AS we specifically mention, and tell them company, please sign and accept, acknowledge, and then send me back the letter. After accepting the audit, if at all the financial reporting framework is unacceptable, auditor can withdraw. This is a point you learned in CA Intro, SA 210. Here also, first considerations when accepting such an engagement, straight away 4 marks. What are the considerations by the auditor when accepting audit of special purpose financial statements? What are the considerations when auditor accepting? First, financial information needs. First, what auditor has to check? Financial information needs, like the intended user's needs are key in determining acceptability of financial reporting framework which is used for special purpose financial statements. Look, did the company prepare special purpose financial statements in accordance with the information needs of the user? For whose instance, at whose instance these financials are prepared? Check out. In special purpose, no. Generally, first a company will prepare financials. Then only you will start audit. Generally, in a special purpose financials, unlike in a normal general purpose financial statements audit, where you will be appointed well before financials are prepared. Whereas generally in a special purpose financial statements audit, first a company will prepare financials and then they may approach you for audit. Or they may appoint you, they may request you to do audit well before preparation of financials. That time, no, you wait. Don't accept appointment. This is not a statutory appointment. Is this a statutory appointment? This is not a statutory appointment. Why are you hurrying? Tell the company first to prepare financial statements and come. Tell them to prepare financials and then come. Sir, financials are not yet prepared, sir. First you accept, sir. Otherwise the contract we will lose. He's asking first whether auditor is appointed or not. He's asking. From yesterday he's calling. Then I will accept with a precondition in the engagement letter that in accordance with the provisions of the contract only you will prepare financial statements. I will accept with that condition. Fine. Anyhow, ignore that. You just see. First, what auditor has to check when you are accepting an audit of special purpose financials? What you have to check? Information needs, intended users. Who are they? What is their needs? The needs, intended users need. Financial information needs of intended users are important in determining acceptability of financial reporting framework which is used for preparation of special purpose financial statements. Applicable, it includes, like how it includes, it may be financial reporting standards set by authorized or recognized organization. These standards are acceptable if the organization follows established or transparent process. Tell me, for special purpose framework, will there be any established organization dealing with that framework? My question is, for Schedule 3, there is NFRA board is there, NFRA is there, ICA is there, MCA is there. Who will sit and frame Schedule 3? Who will sit and draft Ind AS? But for special purpose, is there any such body? Array, it's a special purpose framework. Obviously, how come a body will be there? If at all there. For example, I have made one example on this long ago. Just a minute. In CF final only it will be there. World specialized areas. Okay, we'll do one thing. Just do one small, So we'll ask ChatGPT, we'll throw this example, it will give you one artificially created example and we'll interpret that. Analyze this and give me a real example. Okay. In context of special purpose financial statements. I will use the word statements clearly. Again, if I say special purpose framework, no, that may be a financial reporting, may not be related to finance. This will have a problem again. Yeah. You see, same side headings it adopted and then giving examples. Real world example. Special purpose financial statements for a private company loan application. What auditor has to consider? Obviously, first thing, information needs of the bank. Correct? Suppose a company prepared financial statements exclusively as per the requirement of the bank. Now that company approached you, sir, can you accept the audit? First I need to see how you prepared financial statements. Sir, as per bankers need. Where is the bankers need? Contract show me. So applicable framework, the company follow gap, but adjustments are made in light of, to highlight cash flows. Law and regulation, there is no mandatory law for these loan applications. Okay. Conflict with regulations, the SPFS must align with banking regulations but might differ from general purpose. No. Can you draft in light of NGO? I'll ask better. Can you draft in light of NGO? Earlier we have got NGO example only. You see, there is an NGO working in rural sector receiving foreign donations. The donor requires special purpose financial statements to ensure that funds are utilized as per the grant agreement. You see, I think something is good here. So, what is the auditor's consideration? Look at our book. What are the considerations for accepting such an audit engagement? First, you need to consider financial information needs. So needs of the users, user needs, intended users needs, that is most important in determining whether the financial reporting framework is acceptable or not. You prepare special purpose financials for user requirement, right? His need is most important to know whether the framework is right or not. First point. Sometimes the financial reporting framework might be there from an established body. User required as per so and so method. Luckily, there is a body which is also released a framework on that method only. Suppose there is a body which released cash basis of financial statements. Suppose the bank is asking me to prepare financial statements on cash method. And how to prepare on a cash method, I'm struggling. There is another body which is there, which has already released a cash basis of financial statements to meet banker requirements. If there is a well-established body like this, I will follow that. Look at. So the donor requires detailed financials on what? Grant utilization, project expenses, impact assessment, rather than full balance sheet and P&L. Okay. Applicable framework is what? The NGO follow local accounting standard, but SPFS include donor specified format. The report must comply with international public sector accounting standard for grants. Okay, for grants there is some international standard is there, that format they are following. Okay, so which means even though there is a special requirement from the donor, there is a well established framework available internationally, so that framework management can adopt. Laws and regulation. The NGO is governed by FCRA Act in India, which requires specific reporting of foreign funds. The SPFS must ensure compliance with FCRA reporting rules along with donor. Suppose for the special purpose financials, if there is some related law and regulation that is also dealing with it, then that law and regulation related disclosures also can be given. Conflict. If donors reporting format conflicts with conflict with FCRA, the auditor must ensure that both the requirements are met. SA 210 requires auditors to take prescribed action if conflict exists. The donor agreement serves as financial reporting framework for SPFS. The auditor verifies whether SPFS meets donor criteria. The auditor determines how much detail is required for compliance, ensuring that donor expectations are met. If administrative expense exceed grant threshold, the auditor must highlight this in SPFS. Conclusion. Okay, fine. Come back. Do you think generally will there be any standard organization body for special purpose? Will there be any legal and regulatory authority for special purpose? Is there a chance of conflict between all this? First of all, the existence of them itself is not there. So there is no chance of conflict. So see, here ultimately the point is one thing. If at all you are accepting an engagement to audit special purpose financial statements, first users needs is the most important thing to know which framework is applicable to. Sometimes these needs are addressed in some other framework. Established framework might have been there. See whether you can prepare. See whether management can prepare financial statements as per that framework. Sometimes this requirement is also addressed in law or regulation. See whether financial statements may have to be prepared as per that law or regulation. Suppose if at all they have to be prepared as per standard, they have to prepare as per established standard organization. They also have to follow some law or regulation along with user requirement. See, is there any conflict between all this? If there is a conflict, resolve the conflict and then do audit accordingly. Technically, in reality, we will not have laws and regulations. We will not have any specific recognized organization related special purpose framework. Our special purpose framework is purely decided by user. A separate regulatory, separate standard setting body will not be there. Separate regulatory body will not be there dealing with this, because this itself, special purpose financial itself, is an hypothetical scenario. Correct? Huh? It is not a public domain. First of all, it is not a public document generally. So, considerations when accepting such an engagement. What is the consideration? Intended users' needs are important in determining acceptability. So, applicable framework, what it includes? Standards set by authorized and recognized body. These standards are presumed acceptable if organization follow established or transparent. Which organization? The standard setting organization. If at all a standard setting organization follow an established process of developing financial reporting framework, that standard setting framework is there, that can be adopted for our special purpose financial statements, provided the requirements are not conflicting with users. 3. Some laws and regulations may require specific framework for preparing SPFS. For example, Foreign FCRA Act, if at all contains, whenever a company which is receiving foreign donations, if at all they have to present a financial statements utilization report, all that to a foreign donor, FCRA prescribes format of the financial statements, for example. Then along with the requirement of the donor, you should also answer, you should also prepare, the management should prepare financial statements that address FCRA Act. Suppose if FCRA Act is there, in the Act they clearly mention, if an Indian NGO which is receiving donation from a foreign donor, and if at all they are required to prepare any financial reports and financial statements for the foreign donor, the report should contain minimum these elements. Like that, if at all FCRA Act mentions that when you are preparing that reports, when you are preparing that statements, when you are preparing that financial statements, you must include FCRA Act related details along with user requirements. Are you getting it? Some laws and regulations may require specific framework for preparing SPFS, certain entities. In such case, the framework is acceptable unless indicated otherwise. The framework is generally presumed to be acceptable unless if the FCRA says, suppose FCRA says one exception, this point will not apply if at all donor has given a specific reporting format to the donee. So no, in such a case, the FC area format of report is not applicable. First of all, I really don't know whether FC area has this format. To suit this example, I'm altering it. For example, FCRA Act, Foreign Contribution Act, Regulation Act, it says every NGO receiving donation from abroad must present to the donor the following financial statements. The following information must be presented to the donor. They gave a format, they gave a form and content, framework they gave, and exception they gave. What they gave in the exception here? If at all donors requires, if at all donor specifies any other format, then this format do not apply. If the frame generally regulatory FCRA framework is presumed acceptable framework unless indicated otherwise. FCRA law says if donor gives some other framework, then follow donor. That time what is most important? Needs of the donor. So by default, I will prepare financial statements as per the requirement of the donor. That is the primary thing. Second, if at all there is any standard setting body or any well established organization has released a special purpose financial statement format for which is suiting my requirement, then I will follow that. Or if there is any law or regulator who gave a special financial reporting framework format to suit my situation, by default I assume that it is acceptable framework unless otherwise exists. Understood? Suppose if financial reporting standards are supplemented by legislative requirements, SCA 210 asks the auditor to check for conflicts. Auditor must take prescribed action if at all conflicts exist. Unfortunately, for example, standard setting body released a framework, regulatory body released a framework, specific user gave a framework. Which framework we should follow? Resolve the conflict. Always framework of the user will prevail. Are you getting it? If at all FCRA law says, very simple, you are preparing financials, right? Try to identify, is there any law applicable on this? Yes, some laws are applicable here. In this incident, some laws are applicable. See, in that law, framework related discussion is there. Luckily not there. Ignore. User requirement, prepare. You clear. So when you're preparing special purpose financial statements, don't take it granted that you only have to look at user requirement only. See whether this entire incident falls under some law, falls under some regulation, falls under some standard setting body. If so, you need to check. Clear? All of you. Framework from other sources. The framework may also sometimes come from other sources. What is most important? Financial information need is important. He himself gave the contract. The contract itself gave what format to follow. In such a case, acceptability is determined by whether the framework shows attributes of acceptable framework as per 210. Acceptability is determined by whether the framework shows attributes of acceptable financial reporting framework. Nothing but if some legal reporting, some regulatory financial reporting framework is there, or some standard setting body framework is there, their requirements, and if at all contract is also having requirements, if they both are matching, then we say that the reporting requirement of a contract is acceptable. Otherwise, you need to see, should I give reporting as per the contract, plus should I also give reporting as per law, plus should I also give reporting as per standard setting body? If at all there, you need to see and try to resolve the conflict and then give a reporting. Generally, I told this is a very, very, very hypothetical situation. Next, professional judgment. In special purpose framework, the importance of each attribute is determined by auditor's judgment based upon engagement needs. See, there will be so many attributes. For example, one of the attributes is grand utilization. One more attribute is utilization in cash. Some foreign company donated. So no, some foreign entity donated some huge amount of donation to this NGO. Major importance in that the donor emphasizing is utilization. That too, utilization, he is even more emphasizing on utilization in cash basis, physical cash. If at all the company is withdrawing money and then spending, what kind of controls are there to ensure that the cash is not misutilized? So that is the kind of requirements and those attributes. So importance of attributes. So obviously, financial statements has to be prepared keeping in mind requirements of the user, needs of the user. Needs of the users are called as attributes. Needs of the users are called as attributes. So auditor has to, it's like there will be so many attributes. User might be asking so many information. Which is most important, which is next important? Auditor has to apply professional judgment. Only this part is very tough in this standard. Why this part was tough? You know, they are bringing hypothetical scenario. What hypothetical scenario? First of all, for a special purpose framework, why an established standard setting body, standard setting organization, why first of all it will be there? Then they are bringing one more hypothetical scenario, that you are preparing special purpose financials that may be addressed by some law or regulation. In that case, you should see law or regulation is also complied. Which law? There is no law. That's why we took a ChatGPT example, FCRA. Maybe FCRA requires you to submit compliance, or you to submit grant utilization report as per a particular format. Grant utilization report as per particular format to the foreign donor. They told that. At the end of that, they also mentioned, if the foreign donor gave different format, if the foreign donor gave different attributes, then you may have to follow those attributes. So acceptability of a special purpose, what are the considerations before accepting such an engagement? Needs of the financial information, needs of the user, specific framework required under law or regulation. If at all there is any specific framework in the law or regulation, I will assume that it is acceptable. And applicable framework, it includes financial reporting standards set by authorized body. These standards are generally assumed as acceptable, because if they are following generally established process, transparent process, I generally assume, if at all there is a specific body releasing standards on special purpose financial statements, on preparation of special purpose financial statements for foreign donations, if at all a specific body releases some standards, I assume that they are very good, they are acceptable framework. Or if law and regulation give a specific format, I assume that they are acceptable. If they are having conflict between themselves, then I will try to resolve it. Ultimately, the important, what are the attributes the auditor has to give importance, it is decided by the user's requirement. Primarily, you prepare financial statements as per the information needs of financial information needs of specific users. Correct? That's it. So whether the financial reporting framework is acceptable, look at the needs of the user. Look, is there any special purpose framework released by any standard setting body? Look, is there any special purpose framework released by law and regulatory? See whether there are any conflicts between this, resolve it, and also see that the financial statements are addressing important attributes of the various users, important attributes of the user's requirement. These importance of the attributes is professional judgment of the auditor. Over. Clear? All of you? I know it is 5-10% vague, because they brought a hypothetical situation called standard setting body, law and regulation. Typically for special purpose frameworks, will there be any law? Will there be any standard setting body? Clear? So when you're planning and performing the audit, what are the considerations? When you're planning and performing the audit, what are the considerations? Remember, considerations for accepting such an engagement is different. Considerations when planning and performing the audit is different. This itself can be asked as a 5 marks different question. While planning and performing the audit, you should consider requirements of 200. The auditor must comply with ethical requirements, including independence. All relevant SES per audit you need to comply. Exceptions. The auditor may depart from a particular SA requirement in exceptional circumstance by using some alternative procedure to meet the objective of the standard, to meet the aim of that requirement. Generally, we follow standard requirements only. Standard, whatever they require only, we do that only. Very exceptional cases, we may deviate from the standard requirement and do some other process. Next, special considerations. Application of some of the standards on auditing in an audit of SPFS may require special consideration by auditor. So whether normal auditing standards, do they apply in special purpose financials? Auditor has to specifically consider and then decide. Understanding accounting policies. The auditor should understand entity selection and application of accounting policy. For contract based financials, the auditor must understand management interpretations of the contract. Management's significant interpretations of the contract. What do you mean by significant interpretation of a contract? Maybe in the contract, no, they might have told you to follow some method of accounting. They might have told you to follow a method of estimation for provision. That method of estimation which they spoke, no, it is little bit dubious in the sense like it is giving multiple meanings. You know, an interpretation is treated as significant when an alternative interpretation could be possible and it results in a material difference. So what auditor has to mainly consider in a contract based financials, the auditor must understand management significant interpretation of the contract. You read the contract, you read the contract and you understood that financial statements ought to be prepared as per so and so regulation. See whether management also understood in the same way, or do they understand in a different way and preparing all together in a different way. According to you, like this is regarding some income recognition. Management followed service completion method, but when I see the contract, they didn't mention the method of revenue recognition. They just mentioned recognize on accrual basis. And here in this company, PCM method is applicable. Percentage completion method is applicable for recognition service income, but they're following completion service method. Able to understand? They're following completion service method. These two, like at the end of the day, interpreting the contract, sir, any way I can interpret upon, see, the contract reads like this: the company has to recognize revenue from sale of services on provision of service. The company has to recognize revenue from services on accrual basis on provision of service. This is how the term. On provision of service means what? On providing the service means what? After completing the service, or on a proportionate basis, the contract has two different meanings. That agreement, the term has two different meanings. In such a case, and tell me if I interpret it as a percentage completion method, the revenue recognition amount is different. If I interpret it as a service completion method, the revenue recognition is different. Correct or not? So when contract has significant interpretation possibility, auditor has to be very, very careful. Auditor has to understand what interpretation the company took, whether that interpretation is acceptable in light of the contract. You and management had a conflict here. You are saying interpretation is that, management is saying interpretation is this. When there is a conflict, directly contact the third party. He is the one asking to prepare financial statements, right? Ask him directly. Get to know what exact method they need to follow. Answer is over. So the auditor shall understand what accounting policies entity has selected and applied in preparing special purpose financial statements. When he is planning and performing the audit, first understand the accounting policies, especially for contract based financials. No, if there is any significant interpretation is existing, how audit management understood that interpretation? What do you mean by significant interpretation? An interpretation is significant when alternative interpretation could result in a material difference in financials. Obviously, if at all provision of service, what does it mean? Providing service up to 31st March, completing service up to 31st March. What does it mean? If at all that interpretation is slightly different, it could result in huge difference in the revenue recognition amount. That could materially impact the profit. Correct? So if a particular provision of a contract, if at all financials are prepared based on a contract, and in that contract some terms are having significant interpretation possibility, the auditor has to check what exactly management interpreted this. Is that interpretation correct in light of the circumstance? If you are also not getting clarity, better send a clarification note to the third party, exactly what method he wants us to follow. You will get it. Next. Obviously, materiality level, correct? In special purpose financial statements like those prepared for contract requirements, management may agree on a threshold below which misstatements will not be adjusted or corrected. Generally, materiality will be decided by SA 320 standard based upon auditor's professional judgment. In case of special purpose framework, ask the user. Ask them. Management should ask the user at whose instance we are preparing special purpose financials. Ask them, sir, our auditor is asking whether mistakes at certain amount below can be ignored by him, right? What amount is that? Materiality will be decided by consulting with the specific user. So the management may agree on a threshold below which misstatements will not be adjusted, misstatements will not be corrected. Nothing but below which means what? Immaterial. The existence of such a threshold does not relieve the auditor from determining materiality as per 320, which means even though there is a threshold limit given by the management, even though materiality level is fixed by the management, you should consider remaining adjustments of remaining concepts of SA 320. Once materiality is fixed, what you should do later on, how you should interpret the materiality. 320 standard only dealing with that incident also. Maybe materiality has to be revised as audit progresses. Okay, next, communication requirement as per 260. The auditor needs to determine who is the right person within the entity's governance structure to communicate with regarding audit of special purpose financials. Because people who are dealing with special purpose financial statements and people who are responsible for general purpose financial statements might be different. Management of the entity that is responsible for general purpose financial statements and management of the entity that is responsible for special purpose financial statements may not be same. Possibility there. Are you getting possibility? Suppose generally, who is the man, which part of the management is responsible mainly for general purpose financial? CFO. He is the one who has to sign. CEO has to sign the balance sheet P&L. CFO, 2 directors have to sign. Generally, these directors are finance directors. Actually, now special purpose financials are prepared at the instance of one of the executive director who is dealing with foreign related some affairs. He brought one client. He is dealing with that client. Yes or no? Then the client has asked this particular director to prepare financial statement. Generally, this director do not deal with financials. Now he is dealing with financials. Now those charged with governance means what? This director. Understood? All of you. Those charged with governance means generally not the regular management here. He's the director at whose instance the company is preparing special purpose financials. When GPFS and SPFS are prepared, the person responsible for oversight of SPFS may differ from those responsible for GPFS. Correct? If all top management involved in managing the entity, communication requirements are modified accordingly. If every one of them is involved, in the managing the entity, all of them are top management, then whom exactly you should communicate? You should decide based upon who is accurately responsible. We will discuss 260 standard. There we will discuss who is those charged with governance. 1 page discussion is there. Who is those charged with governance? In the recent Jan 25 exam also, CA into students, they asked it for 5 marks. Who is those charged with governance? So here also in special purpose financial statements, who is those charged with governance? Because you have to communicate. As per 260 standard, you have to communicate with top management, correct? So the auditor need to determine who is the right person within the entity so that you can communicate. Why you struggle? Ask them who approached you. Ask him to whom I should communicate. He will tell you. 260 standard tells the same. 260 standard tells exactly the same. Just a minute. This is what is the page number. Just make a note. 126. Okay. So where is 260 in our book? Chapter 2 gap. Yes, you see. Who are those charged with governance? Depending on governance structure. Separate, single board, legal position, overlapping is there, a collective responsibility, a smaller entity, diversity, unified governance. Ultimately, agree with engaging party. Who is those charged with governance? Auditor has to decide with engaging party. Why you struggle? Ask the party. Look at the governance structure. Look at the law and regulation under which the company is preparing financial statements. By considering all this and by asking the management, you will understand who is those charged with governance. Now the point will be different. This point cannot be as it is adopted in SA 800. For a special purpose framework, who is those charged with governance? Again, might differ. At whose instance in this company, who decided first that they should prepare special purpose finance? Look at him. Look at that person. He might be the appropriate person to whom you may have to communicate as per 260. Now go back. So Who is communication requirements? This itself, no, 3 marks or 4 marks question might come. You were appointed as an auditor. You were appointed as an auditor to conduct audit of an entity. You are appointed as an auditor to conduct audit of an entity which prepared special purpose financial statements in accordance with reporting provisions of a contract. In light of the audit of these financial statements, you have to communicate certain important issues to those charged with governance. Write about communication with those charged with governance in light of special purpose financial statements audit. The auditor has to decide the appropriate person within the entity's governance structure to whom to communicate with in respect of audit of special purpose financial statements. If all of them are involved in managing the entity, you have to communicate accordingly. For example, when both general purpose are prepared by the entity, those responsible for oversight for special purpose, might differ from those responsible for general purpose. If all of them are involved, no, specifically identify whom you should communicate. Forming of an opinion. When reporting on special purpose financials, the auditor will follow 700 requirement only. When you're forming the opinion, how to form an opinion, 3 points you should check. Whether sufficient appropriate evidence obtained, whether uncorrected misstatements are immaterial. Third one, evaluations to be made by auditor. Just we have seen SA 700 conclusion. Understood? What are the points, considerations when planning and performing the audit? What are the considerations? The auditor must comply with relevant ethical requirements and all relevant standards on auditing. Some of the application of some of the requirement of SEA may require special consideration. Some special considerations will be there in standards. You need to understand accounting policies, especially for contract-based financials. No, see whether management understands significant interpretations of the contract correctly. What is a significant interpretation in a contract which has an alternative interpretation that could result in a difference in financials? Don't write material misstatement. No. It's a material difference in financials. A different interpretation could result in a material amount difference in financials. I'm not saying misstatement. Understand? Then materiality in special purpose financials. No, management may agree on a threshold below which misstatements will not be adjusted. So management may decide materiality level in case of a special purpose financial statements. Nevertheless, you should also apply T20 requirements on the materiality consideration when you're doing audit of special purpose financials. And if you think management decided materiality, your materiality decided as per 320, if there is a huge variation, resolve it. But ultimately remember, it's neither you nor management but third party at whose instance we are preparing special purpose financial statements. His decision will prevail, because it is not going to be used by you or him, but management. It's third party, for his purpose we are preparing, so third party only will decide. Clear? Communication. The auditor need to decide the appropriate person within the entity's governance structure to communicate. When both of these are prepared, the responsible parties for SPFS might be different from responsible parties from GPFS. If all of them are involved in managing the entity, communication requirements are modified accordingly. You should not communicate to everybody. You should communicate to the appropriate person. What the meaning? You? All of you? Description of applicable financial reporting frame. 5 minutes gap will take. Okay, only this standard is tough because this is a little vague. Don't worry, I'll repeat one more time. I'll repeat again from the beginning one more time. 805 will be easy. And remember, in spite we understood special purpose framework, general purpose framework, fair presentation framework, compliance framework, and discussed entire subject in framework terminology, in spite of that you are having little difficulty in the standard. I bet you ask your friends who have not listened my class, for example, they don't even know fair presentation framework. Many don't read all this. Hey, what framework in exam, what will be asked? They'll immediately see that. Without understanding they read. With understanding itself is so difficult. Without understanding it's impossible to read. Getting it? You may get 40 plus in audit. Sometimes you get probability factor is low. If you want to improve the probability factor of scoring more in audit, clarity is required. I'm not saying that those who don't know the subject they failed. They may qualify. but the probability of qualification, probability is very low. Understood? It's all about risk analysis. Okay, we'll continue the next session. Yeah, let's proceed discussion. Now here if you see, what are the considerations when planning and performing the audit? What are they concluding indirectly? You should comply with 200. You should do some special considerations, yes or no? Various SES, no? All that special considerations. You should apply 315. Specifically, you should see whether significant interpretations are possible, and then materiality. Generally, in special purpose financials, management will decide materiality by agreeing with the third party. Yes or no? Materiality levels are prescribed by management, and auditor generally follow those materiality. In spite of it, 320 requirement also will still apply. For example, in 320, what are requirements? You have documentation of materiality, revision of materiality, yes or no? Materiality with audit risk assessment. All these requirements you should still comply. Just because just because materiality limit is prescribed by management, that doesn't relieve you from complying with materiality of 320. Management decided overall materiality. You should decide performance materiality. You should decide triviality level materiality. You should decide about documentation of materiality. See, 320 standard is addressing so many things. Overall materiality alone is decided by management, is decided by third party. Rest all other materiality levels, while you are performing the audit, revision of materiality levels, documentation of materiality levels, interpretation of misstatements with materiality, everything is responsibility of auditor. Everything else is responsibility of auditor. He should comply with 320 requirements also. Clear? Except that maybe fixation of materiality may not apply, because already the client has decided, third party has decided, below which they are not considered, they are not rectified, they are not corrected. According to them, that may be material. Clear? Communication with, communication as per 260. So the auditor may have to communicate with the appropriate person in the governance structure. If all of them are involved, you have to modify communication requirements accordingly, so that you can only communicate to the right person. Why? Because special purpose financials framework, special purpose financials appropriate party, general purpose financials appropriate party might differ. And when reporting, you should also follow 700. Now, description of applicable financial reporting framework. Description of applicable financial reporting framework. Revised 700 standard requires the auditor to evaluate whether financial statements adequately refer to or describe applicable financial reporting framework. In case of contract-based financials, whether significant interpretations of the contract are described in financial statements. The 700 standards is very simple. You should always, financial statements must disclose on what basis financials are prepared. If at all financials are prepared based on a contract, significant interpretations involved in the contract must also be disclosed. The auditor has to check whether these disclosures are satisfied or not. The auditor has to check whether the disclosures are there or not, right? As per which standard these disclosures you need to check? 700 standard. Are you clear? Next, what is the form and content of audit report? SES 700 only deals with form and content of audit report, including specific ordering of certain elements. What should be the order of elements of the audit report? 700 only we will follow. For special purpose financials, the auditor report must include purpose for which financial statements are prepared and the intended users. Where do we include this? Emphasis of matter paragraph. Yes or no? If management has a choice of framework, then auditor must refer management responsibility for determining framework's acceptability. If at all management has a choice of framework, schedule 3 or some other framework they can follow, at the end of the day they need to satisfy the reporting requirement of the user. At that time, no, auditor may also refer about management's power to choose the framework and acceptability of the framework. If key audit matters are communicated in audit report, 701 applies again. If at all you want to communicate key audit matters when you are doing special purpose financial statements audit, you felt some areas caught significant attention and you decided to communicate key audit matter also, then 705 requirements you follow. What is 705 requirements is? Do not communicate if at all Do not communicate if at all you are giving disclaimer of opinion, and do not communicate on a matter which requires modified opinion. Do not communicate it as a substitute for material uncertainty. And when you are communicating, communicate what is the key audit matter and what is your response to that matter. In the sense, what audit procedures you provided, how auditor addressed the matter, and the introductory language of that section, key audit matter, shall be same as per 701. Consider requirements of 701 means these only. Next, for example, if SA 720 applies, when reports accompany special purpose financial statements, for example, when the company is giving special purpose financials to third party, they are also giving other information. Then auditor should also read other information. These reports are designed for owners, stakeholders, and are treated as annual reports. In case financials are prepared using special purpose framework, similar stakeholders or specific users for whom SPFW is designed to prepare special purpose financials. Next, reference to general purpose financials in special purpose financials audit report. Did we refer other matter paragraph? Yes or no? The auditor may include in another matter paragraph of the audit report on special purpose financials, where you can refer to audit report on complete set of general purpose financial statements. How do you report? As per 706. That is nothing but what? Other matter paragraph. We have already saw illustration 2. There the financial statements are prepared in accordance. there the financial statements are prepared in accordance with reporting requirement of a regulatory. There the financial statements are available on a public domain. So auditor might felt necessary that people should know that there is another financial statement set that is on public domain, that is general purpose financial statements. So their auditor has used other matter paragraph. At the end of the day, whether to use this or not is a discretion of the auditor. But the standard says what? You see, that's what may include. That is your choice. The standard does not compulsory, but it is better always for us to include, because along with these financials, in order to understand about the entity, you should also read general purpose financials. You should also refer to audit report on general purpose financials. Correct or not? So the auditor may refer to general purpose financial statements in the audit report to be given on special purpose financial statements. The auditor may include another matter paragraph in the audit report on special purpose financial to refer to audit report on complete set of the financials. Not only this, the auditor can also include matters, material uncertainty related to going concern, which is already given in general purpose financial statements related audit report. Same instant, if at all material here also third party should compulsorily know this, then I may refer about that material uncertainty related to going concern. So what auditor has to describe regarding applicable financial reporting framework? What description auditor has to provide? First, you need to check whether financial statements adequately refer to applicable financial reporting framework. In case of contract based, whether significant interpretations are described clearly. And SA 700 deals with format and content of the audit report. In special purpose financial statements, the auditor report must also include purpose for which these financials are prepared. Who are the intended users? If management has a choice of reporting framework, the auditor must refer management responsibilities for determining framework acceptability. In management responsibilities, I will tell management is responsible to prepare the special purpose financial statements in accordance with the requirement of the user, and management has the choice of financial reporting framework. Ultimately designing ultimately selecting an appropriate framework is the responsibility of management. Our responsibility is to verify whether financial statements are prepared in accordance with applicable financial reporting framework as per the user requirement. That's it. Then if key audit matter you want to present, SA 701 requirement will apply. If 720, if at all the special purpose financial statements are given along with some other reports, then 720 reporting requirement also will apply. And I can also refer in other matter paragraph about general purpose financial statements, audit report on general purpose financial statements. I can refer about them in other matter paragraph. In which audit report? In the audit report to be given on special purpose financial statements. This is about description of financial reporting frameworks. Clear? Next, and tell me, I must alert readers know that the financials are prepared as per special purpose framework, how do I alert? Emphasis. Special purpose financial statements may be used for purposes other than those for which they were intended. There's a possibility, especially when they were on a public record by a regulator. They were placed on a public record because of a regulatory requirement. So there's a possibility that special purpose financial statements might be interpreted for the purpose other than they're prepared for. To avoid misunderstanding, the auditor includes emphasis of matter paragraph in the report explaining that financial statements are based on special purpose framework, may not be suitable for other purpose. Accordingly, SA 706 requires emphasis of matter paragraph to be placed in a separate section of the auditor report with a suitable heading. Then sometimes it is not on a public record. The special purpose financial statements are restricted for distribution and usage. Alert specific users. The auditor may indicate that audit report is intended only for specific users. This may involve restricting distribution. This may involve using of the report depending upon the law or circumstance. Expanding the alert. The alert paragraph may be expanded to include restrictions on distribution or use with the heading modified accordingly. That's why emphasis of matter, again heading restrictions on distribution and use. So our heading will be extended accordingly. Emphasis of matter paragraph, basis for accounting, and restriction on use and distribution. Refer illustration 1. We draw attention to note number 10 describing basis of accounting. The financial statements of the company were prepared as per reporting provisions of a contract, may not be suitable for others. The report is intended only for may not be suitable for others. No, this is about basis of accounting. Here I am talking about basis of accounting. This statement is the right. The report is intended purely for the company and DEF and should not be used by others. Restriction on usage. The auditor's opinion is not modified on this matter. So this yellow highlight, whatever is there, right? This yellow highlight is completely talking about restriction on distribution, restriction on usage. Finally, the auditor's opinion is not modified. I am just alerting the users. That's it. I am not objecting on anything in the financial statement. Clear? All of you? That's it. Over. Standard. In exam, how different questions will come? Write about restriction on distribution or use and references to be made by auditor in the auditor's report and manner of referring this. 3 or 4 marks question. The auditor may indicate that auditor report is intended purely for specific users. This may involve restricting distribution or use of the report depending on applicable law or regulation. So you will have to restrict the distribution of the special purpose financials, use of the special purpose financials and audit report. So depending upon the applicable law, applicable regulation, applicable provisions of the contract. Expanding the alert. The alert paragraph may be expanded to include restriction. What is the alert paragraph in the SA 800? Emphasis of matter. Emphasis of matter paragraph is the alert paragraph to say that these financial statements may not be usable for these financial statements are not suitable for others. And accordingly, these financial statements are purely for so and so parties and should not be used by others. This is an alert paragraph. Alert paragraph, what name we are giving? Emphasis of matter paragraph. That name we are giving. Able to understand? Where are we drawing this alert of the users? Emphasis of matter paragraph. Understood? Next. Now once again from the beginning. Now you will feel very easy. SA 800. Special considerations. Audit of financial statements prepared in accordance with special purpose framework. What the standard is addressing? Acceptance of the engagement, planning and performance of the engagement, forming of the opinion and reporting on the financials. Yes or no? Reporting means what? Restriction on distribution and use, alerting the users, all these points. Correct? Now, what is a special purpose framework? It is a financial reporting framework designed to meet needs of specific users. It can either be a fair presentation or a compliance framework. Special purpose framework determines form and content of the financials. What constitute a complete set of financial statements? Special purpose framework determines what should be the format, what should be the content, what constitute complete set of the financial statement. Generally, financial statements means what? Complete set of the special purpose financial statements. It includes notes such as accounting policies and explanatory information. The term special purpose, that's it. So special purpose is for specific users. General purpose is for common financial information needs of wide range of users. Next, when you are accepting the engagement, you should consider the following. First, information needs of the users. Check out. Second, is there any standard setting body? Is there any organization that established standards for special purpose financial statements? If so, we generally assume that that is acceptable framework, and we should see that management prepared financial statements as per standards established by standard setting body, even though it is a special purpose financial statement. Sometimes law and regulation may require preparation of special purpose financials as per special purpose framework. If there is a law and regulation dealing with this, then we assume that that law and regulation is acceptable framework. What is acceptable framework? It is primarily decided by information needs of the user. Secondarily decided by established standards, organization or setting body. Third, is there any law and regulation that is dealing with financial reporting framework for special purpose financial statements? If there is a conflict between all these three, auditor has to resolve the conflict. Are you clear? Ultimately, information needs of the users is what ultimately important. Then framework from other sources. Sometimes the framework is decided by a contract, yes or no. Then acceptability is determined by whether framework shows attributes of an acceptable framework. See whether attributes given in the law, attributes given in the standard setting body, attributes requested by the users, are they all presented correctly by the financial statements? If so, then the framework is acceptable. Clear? You got much more better meaning now? Finally, which attribute is most important so that the financial reporting framework becomes acceptable is a matter of professional judgment of the auditor. Which matter is, what is an attribute? For example, in a government, if at all you're receiving any foreign grant, the donor might receive, the donor has asked the company to prepare financial statements for that project. He gave a grant for a particular project. So he is asking prepare a balance sheet and P&L for the project exclusively. That project related assets they bought, project related liabilities they have, project related incomes, project related expenses. Prepare a report on that. And he specifically told grant amount shall be recognized on assets like this. Grant amount related to revenue purposes shall be recognized like this. Grant utilization must be reported like this. Grant amount spent in cash mode shall be reported like this. He is asking certain attributes. And regarding the same grant utilization financial statements, but for a particular project, there is a standard setting body which also released. There is a FCRA law which also released on this. See whether all these three are exhibiting importance to the attributes or not. Check out that particular framework where attributes is properly covered, where all the attributes are properly covered, then that is treated as acceptable framework. Ultimately, the financial reporting framework that you are adopting must address all the attributes that are required for the specific user. And which attribute is important for the specific user, which attribute is not important, it's auditor's judgment. It is always decided by discussion with the specific user. Understood? Next, when you are planning and performing the audit, comply with standards on auditing. Like ethical requirements, all the standards. Sometimes a SEA you may depart from a specific requirement of a standard in exceptional circumstances, like using alternative procedures to follow. For example, you want to get an external confirmation from third party. Standard says you need to go for external confirmation, but in this case third party is not reliable at all. He's close to management, so this requirement of the standard is not suitable to me. Then I need to perform alternative way to achieve the objective of the standard. Ultimately, you want to know whether third party account balance is correct or not. So that is what you want. Subsequently, he paid or not, I saw. He paid. Enough, I got the evidence. I may not go for external confirmation, which is a requirement in 501. Clear? Then, special considerations. Application of some of the requirement of the SEA may require special consideration by auditor. Understanding accounting policies, you should understand contract based, financial statements. In case of contract based financials, the auditor must understand how management is interpreting the contract terms and conditions, if at all, especially if contract is having significant interpretation. What is a significant interpretation? If alternative interpretation is possible and that could result in a material difference in the financial statements, then we call it as what? Significant difference. Materiality threshold. Management may agree on a threshold below which misstatements will not be adjusted or corrected. Means management may determine materiality level. Nevertheless, the existence of such threshold limit does not relieve the auditor from determining materiality as per 320. So you also decide materiality, compare with management materiality. If there is a huge variation, resolve it first. Then design performance materiality, design triviality materiality, revise materiality depending upon the risk audit progresses, document the materiality. All this is commonly applicable for the auditor. Finally, you have to communicate with those charged with governance. Now, most importantly, you need to decide who is the appropriate person within the entity's governance structure so that you can communicate to the right people. Sometimes all the top management are involved in the management, so you have to modify your communication requirement accordingly. If all of them are involved, you should not communicate to all of them. Why? People dealing with special purpose financials and people dealing with special general purpose financials might be different. So you are doing audit of special purpose financials, exactly who is the appropriate party you should decide. Next, description of financial reporting. Auditor has to see, auditor has to evaluate whether the financial statements refer to applicable framework. The company prepared financial statement, special purpose. In the notes to accounts, they should clearly mention whether, basis for accounting, they should clearly mention. On the face of the balance sheet also, if possibility is there, they should mention prepared in accordance with provisions of contract. On the face of P&L, they should mention. See whether the financial statements are referring to applicable financial reporting framework. Suppose in case of contract based financial statements, significant interpretations must also be described in financial statements. Form and content is similar to SA 700. For SPFS, auditor report must include specifically the purpose for which these financials are prepared, who are the exact intended users. If management has the choice of reporting framework, in the management responsibilities, auditor must tell whether management has a choice of framework or not, whether the framework adopted by them is acceptable or not. Finally, if key audit matters are there, 701 requirements you follow. If other information is also there along with special purpose financials, 720 requirement you follow. And should I refer about general purpose financials in the audit report? Yes. In other matter paragraph, refer about audit report on general purpose financial statements. In the other matter paragraph, in the audit report on special purpose financial statements. You can also include matters like material uncertainty, if at all. In general purpose financial statements related audit report, material uncertainty is there. The same can be copy pasted by the auditor in the audit report on special purpose financial statements. And auditor has to alert the readers, because special purpose financial statements, sometimes people may use it for purpose other than those for which it is intended, especially when they are placed on a public domain. To avoid misunderstanding, auditor must include an alert paragraph which is named as emphasis of matter paragraph, explaining that financial statements are prepared based on special purpose framework, may not be suitable for others. Yes or no? So EOMP shall be placed in a separate section of the audit report with an appropriate heading. Restriction on distribution. The auditor may indicate that this report is intended only for a specific user. This may involve restricting distribution, restricting use of the report depending on applicable law or regulation. The alert paragraph, it may include restrictions on distribution or use with a heading modified accordingly. Illustration we saw, emphasis of matter paragraph, simply they didn't leave like that. Basis for accounting and restriction on distribution and use, they expanded the heading to convey that it is restricted for it is restricted on distribution, it is restricted for usage, and we draw attention to that it is not suitable for others. This report is purely for so and so party. By the way, our opinion is not modified in respect of this particular matter. And if you read 2 to 3 more times, you will become commendable on this. Clear? That's it. 800 is over. So this 800 is only a bit complex in this particular topic. 805 will be again easy, not that difficult. 805, 810 onwards, in 805, 810 some matter will be there. It is not like a vague, there will be some conclusion on this. 805, 810 you will find some conclusions. In 800 only you will not find some conclusions. 800 is what? When you're doing special purpose financials, see, simply the standard is talking like what? When you're doing audit of special purpose financials, see whether the framework followed is acceptable. When do we say framework is acceptable? If it is as per the requirements of the user, or if there is any special purpose framework designed by established organization or established standard setting body, then that framework may be treated as acceptable. Or if there is any framework, nothing but rules and regulations were given by a law or regulation, a regulatory body, then also auditor may treat that framework as acceptable. If there is a conflict, auditor has to discuss with management and resolve the conflict as per 210. Finally, attributes, whether all these frameworks, are they talking about important attributes or not? Attributes are nothing but user requirements. Attributes are nothing but user requirements. Grant utilization, cash utilization, attributes. Which attribute is most important is a matter of professional judgment of the auditor. Then planning and performing the audit. Then disclosure of applicable financial reporting framework. Then forming of the opinion of the auditor, reporting on the special purpose financials, and restriction on distribution and usage, alerting the readers. Clear? You revise it 2 to 3 times, you will get more command on this. We'll continue in the next session. 805, 805, 810, another 1.5 hour, hardly max 3. It will be over. Question bank will solve. With that, specialized areas will be over. Once we complete specialized areas, we will be completing 15 standards totally. 12 standards already over in audit report. 1 standard now, till now 13 standards we covered out of 46. Every standard I'll cover in the class, and I will tell you for some standards, I will tell you, you have to scan. In the book I have given initially QR, right? You have to scan for 3 or 4, maybe some 5 or 6 standards. You will have to watch my CA interview video on that. I will upload separately. Okay. And I will tell you when to watch also.